Welcome to Accounting High.
Check out the Cashflow Show. We discuss topics like getting paid on time, profitability, and managing your bottom line, payroll best practices, the best apps to use, and cash flow forecasting tools. So if you're a small business owner, your help's right around the corner. Fret not. Tune in as Scott and Nikole help you reach your goals on the Cashflow Show. The Cashflow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. With Nikole and OKR.
Nicole's vibing over there. This is the Cashflow Show. What's up, homies?
What's up? I'm in a mood. I'm in the groove.
Yeah. So this is our part 3 of our sweet Saas startup series. This is going to be a bang up finish to this. We've been talking about, we went over the foundation of all the terms you're going to hear from startups, phrases, terminology. We talked about how that stuff plays into the financials and into the profit and loss and the P&L and how all of that fits together. Today, we're going to talk about getting all that and then automating it. How do we get this reporting for the investors? And for ultimately, we've worked out where all the numbers are going, what they all mean, how they should show up, and now let's automate where they're going to go to present to investors. So why is that important, Nikole?
Well, we have to, at least on a quarterly basis, typically reporting to investors, but foundationally, we need to make sure our books and data is up to date, at least monthly. But a lot of it can be challenging to put together, take a long time, and then also communicating it to investors can sometimes be challenging too, because these people don't necessarily have a financial background. And so we want to make sure that our data tells a story, that we're instilling trust with our investors. So that way, if we at any point go to ask them again for more money, we look professional, we've got our crap together, we know our numbers. And so if you can present yourself as somebody who knows your numbers, people are going to trust you with more money.
Exactly. And the more reliable those numbers are and the more consistent that the reporting is, the more trustworthy everything is going to be. So it all starts with the right foundation and the right reporting and the right tools. What kind of tools do you use, Nikole, for your reporting?
Yeah, so most of our clients are in QuickBooks Online for their accounting, and then some are on Xero. And then we like to use a tool that I've mentioned before on the show called Reach Reporting. It's an amazing visualization tool, and you can basically, the back end of Reach Reporting, you can do any calculation that you want with your financial data. Let's say you're calculating a margin or some sort of percentage or some sort of like burn rate or anything. You just have to calculate it once. And then what Reach Reporting will do is every month when your financials roll forward, it'll auto refresh with actual live data from your QBO or Xero. If you have a budget that you want to import in there, you can, and it will auto refresh.
So as long as the numbers are up to date and as long as the data in QuickBooks or Xero is correct and current, it's going to show up visually in Reach.
Yep. And you can do any sorts of visualization, bar charts, line charts.
And who can see that Reach report? Do you take that Reach report and do you print out copies of it, or what do you do with it?
So there's two options with Reach. We can either do a PDF report, which is what we do now at Momentum. But alternatively, I am an investor in Reach Reporting, which is funny.
Disclaimer.
Disclaimer, but I invested in them because I think their product's amazing.
It's a dope product. Yes, I'm also an investor too. Disclaimer.
It's the best on the market. And when I was going through the diligence process, or I was asking for some preliminary information before I invested, I asked for some financial information, and they created a little dashboard for me. So it's a live dashboard that I can go to, and every couple of months I'll pop in there and see how they're doing. There's two options. There's either a PDF report that you can issue if you like to make sure it's like complete. You don't want them looking at stuff as you're going.
Sign off. You want to sign off.
You want to sign off on
and,
it.
Yeah.
Yeah. Hard close. And then there's also live dashboards that you can create. So if you want to just give them the URL, they can pop on, they can see the live data as it updates. So it just makes you look, I think, really professional when you do that.
Yeah. Yeah. And it also, again, brings back the trust in the investors when they can see a report and they can see, the trends over time, but also just like you said, every couple months you pop in there to make sure everything's going in the right direction, right?
That's right. So Reach reporting will pull in your QBO and Zero data. It can also pull in Gusto data if you have payroll in Gusto. I don't use that feature too much. And then another really cool thing it can do is it can connect to Google Sheets. So for example, if you've got data coming from Stripe or some third-party system that's not in your accounting software, if you can get that data into Google Sheets, then you can connect Reach to your Google Sheet and then visualize that data so you can have that part of your report.
Oh, wow. So that's what you mean by automation for visualization.
Exactly. Yeah. And there may be some extra tools that we can get. I'm sure, a lot of startups have amazing developers on their team. They can probably create some sort of automation to get you that operational data into a Google Sheet that you can then visualize through Reach.
Cool. Yeah. And so any piece of data that might be important to you, you can leverage that and have that show up in a report. You can get data from metrics from maybe Google Workspace, or not that, some of the insights that you get on your website or things like that. Maybe you want to pull that kind of stuff in.
Yep, you can pull in marketing data and visualize that. That's a really cool thing to show too. That's a good point. And then so Stripe is funny. So Stripe makes you pay up to get revenue recognition data like MRR and ARR. It's like an additional cost.
Because it's more valuable.
It's more valuable, but we've had clients who are like, look, we can charge you for us to do this manually extra, or just pay for Stripe to do that. So just know that there is that option to get data right within your Stripe dashboard. You just have to pay up for it.
Really? So that's pretty smart by Stripe. It's like the premium offering. Right?
They figured out that it was valuable for accountants for us to be able to do any rev rec and that we were doing it manually. So they're like, we'll just get paid for it and give it to you rather than you pay your accountant to do it.
Interesting how that goes. All these types of reports, why are they? So who's going to be looking at reports monthly versus quarterly?
You are having some sort of meeting with your investors quarterly. That's usually standard. So you want to go through all your financial statements. You'll give them some KPIs. You'll go over that rule of 40 performance would be nice to add. You'll talk to them about your progress on like strategic goals, product development, market expansion, talking about marketing results that you've had. And so a lot of times investors are also advisors. So they may be people who had a startup, cashed out, and now they're investing in other startups like you. So they might also give you advice on helping you make decisions, things like that.
Are we going to talk about what the monthly reports are or the things that people are looking for?
So usually on a weekly basis, you should be looking at your short-term cash position, burn rate, any significant changes that you need to be aware of. You may be looking at, if you want to look more regularly at your customer acquisition rates, churn rates, marketing data, any notable operation issues that you may want to track on a weekly basis. And then monthly should, in the minimum, be getting your financial report package from your accounting team or accountant, bookkeeper, whoever's accountable for that. You'll be looking at those metrics that we talked about on the first episode. So your monthly recurring revenue, your churn rate, your customer acquisition costs, your lifetime value, any KPIs that you want to track, some of those industry benchmarks that we talked about in episode 2. So you're looking at those as a percentage of revenue or as a percentage expenses. Look at your top vendor expenses. So if there's anybody, like your AWS fees are going up. So this is one thing. We had a client that I don't know the back end of, I don't know if they're using AWS or maybe one of their Google Cloud competitor, but their cost as a percentage of revenue kept going up. And we were like, why is this going up? And so they did something on the back end. So it updated less frequently, like reduced their costs 20% or something.
Oh,
so keeping an eye on those cost by vendor or like as a percentage of revenue so that you can identify, ooh, why are we spending so much on this? And then go see what the cause of that is.
Yeah, I always used to see AWS. I remember first time I started seeing it with some of our clients. It was so much. I was like, what does this stand for? And then I saw Amazon Web Services, and it was a lot of money. It was always like the majority of their expenses. And I started looking into it, and it was just, again, I'm still blown away at what they did, because they were a low margin company just selling products online. And then he invested into all of the data storage, hard investments into all of that. It's just like what they did with McDonald's. The founder, he invested in all the real estate to grow the McDonald's franchise, and that's how he made all of his money. This is like the real estate, and Amazon, that's probably the most profitable service line right now, I'm sure, is AWS.
Oh, definitely. I mean,
Well
they basically
beyond
rule the
everything else.
world with
Yeah.
those satellites go out or
When AWS
something
went out,
happens.
I know it because Zero runs on AWS, and then almost every ancillary product that was on Zero was running on it. And I remember a day it went out, we went home. It was like the whole office went home because we had nothing we could do.
That's sort of like part of the reason why I do both Zero and QBO, because I'm like, if something happens with one of them, at least we have backup, and then we just transfer everybody over. But I mean,
what if something happens to AWS?
if the internet
I don't
goes
think anything
down,
could.
It could. I mean, that would be the next natural terrorist attack or something that would take the world down.
Yeah.
I don't want to think
Amazon,
about it.
Yeah, you don't want to think about Amazon going down. We all rely on Amazon. And we have a lot of, on the other side of it, we have a lot of clients that are e-commerce. And we'll get into that. That's a preview for our next series. After our startup series, we're going to go into e-commerce, and we'll get into how valuable Amazon is on that side of the market too. Because those e-commerce, the fees that they pay Amazon just to host, and the money that they make on Amazon versus if they went solo or outside of Amazon and just tried to build their marketplace online. Maybe you've got like TikTok shops and other things now too, but Amazon is primary source for most people's income on e-commerce. So
yeah, I won't even, like, if I want to buy a new product, I usually go on Amazon first to see if it's there, just because I'm too lazy to add my information to a new website. And I know with Amazon,
it's so
easy
easy
to return.
to buy on Amazon. You can
100%.
use Amazon as a purchase cart for other websites now. They have their shopping cart options are just use Amazon to check out, so you don't have to enter anything in. There you go.
There you
Another
go.
brilliant thing there. So let's go back. Let's zone back in here on
Zone back
these
in.
reporting.
So,
Back from where we got from. It started with AWS.
yeah, the only other thing I was going to add is if you have a budget or forecast, making sure you're comparing that versus actual. And that also can be, I think I mentioned that could be automated through Reach reporting too. And
but let's not take it for granted that they have to have good set of books in order to automate that. So something
true.
has to be done in order for that automation to be effective.
yes, you need to work with somebody who can come in and set up the financials in the way I mentioned, so that data is actually valuable when it feeds into whatever reporting tool you're using. You need to make sure that it's done consistently. So one thing that when I first started Momentum, I never asked when I went through the sales process, like, do you have investors that look at your financials? And then it would always be like, we wouldn't know that the investors needed the report by a certain day, or they had an investor meeting. And so now we talk about that and say, okay, we know your investor meetings, like give us the dates for the rest of the year when you have these meetings so that we can give you all your stuff a couple weeks before that or a week before that. And then you can review it. So you're not scrambling and being like, hey, I have an investor meeting tomorrow. So work with your accountant, communicate with them, right? It's a relationship. Like any relationship, you have to tell them what you need. And so let them know you have this very important meeting coming up on September, whatever it is, and when you need the first set of financial data so you can review it and give feedback. So give yourself some time to back into that.
Well, it's important note is bringing it back to communication and allowing for more time for communication. So the more automations you can have in place here, the more space you have for communication and to communicate the things that you need and to talk to a clear accountant.
Yeah, it's funny. Every once in a while I get prospects I'll talk to and they're like, yeah, my accountant, I get my financials by this time and it's too late, or they only meet with me this many times a month. And I'm like, well, did you ask them to give it to you earlier, or did you ask them to meet with you more often? No. I'm like, okay, well, go do that. And then if that doesn't solve your problem, come back to me, because it sounds like it's a simple fix to me.
Yep. It all starts with clear communication. Cool. Well, this has been very useful for startups, SaaS startups to be specific. Anything else that you want to outline for to wrap up our startup series?
No, that's it. If you have any questions about this or need your books done or your accounting department built out, feel free to go to momentumaccounting.com.
Dope. Yeah. And as I said, we handle taxes at Paget. So PagetNC.com. It'll redirect you to like Raleigh Paget Advisors, but that's us. Yeah, cool. And if you've been listening to all these series and you're getting something out of it, leave us a review. Give us a little 5 stars. Subscribe to the show. We live off of those things. We got a few reviews already. So if you're on Apple, leave an Apple podcast review for us. We'll read it on air.
We'd appreciate that.
Tune in next time. We're going to either continue our tax series or we're going to go into another foundational type of business. So stay tuned for the next series. Peace out, homies.
Later.
Yeah. So you're drowning in cash flow issues. You run a business, but feel like it's running you. Customers won't pay, but you got bills due. It appears you won't have enough for payroll coming up soon. It seems like you're running nowhere fast. You work hard, but never able to withdraw cash from the business. You get more customers, hire more employees, but still take home hardly anything. You feel like you're on a hamster wheel, frustrated cause the battle's always uphill. Even though you got a bookkeeper on your team, they send you reports, but you don't really know what they mean. Your CPA doesn't understand a thing about your business, at least that's how it seems. But if you want to get above water and grow, check out the Cashflow Show. This is the Cashflow Show, where we help the small business gain momentum and become profitable. This is the Cashflow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. Cashflow Show. Discuss topics like getting paid on time, profitability, and managing your bottom line, payroll best practices, the best apps to use, and cash flow forecasting tools. So if you're a small business owner, your help's right around the corner. Fret not. Tune in as Scott and Nikole help you reach your goals on the Cashflow Show. The Cashflow Show, where we help the small business gain momentum and become profitable. This is the Cashflow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. Cashflow Show. Our advice will take you far. Cashflow Show. Tune in with Nikole and OKR.